Hello, property nomads. Hope you're well. Some concerning news coming from MetroBank, and I quote, it begins 3 billion mortgage book sale as borrowers hit by fast hikes. Not a good situation to be in, and rare that we actually comment on such things so close to home. But this could have a massive impact on us moving forward. Before we get into the video, just to let you know that our friends at Progressive are running their multiple streams of property income event. It's 3 days, Friday the 20th to Sunday the 22nd of October. It's in Peterborough, just north of London. Completely free to attend. Aaron and I have been to many of the events before. It's great for getting started in property, great for a property training refresher, and also fantastic networking. So the link is in the description for this video below. So please do go ahead and enjoy a fantastic free 3-day event. Back to MetroBank. So we've got this article here on MSN via GB News, and it's very concerning, I have to say. So MetroBank has reportedly begun talks about the sale of a big chunk of its mortgage book. It's reported that the bank might have some issues moving forward. Advisors to the bank this week contacted a number of potential buyers of the assets, and the bank is reportedly looking to raise around 600 million in capital to help refinance debts. Now, the challenge that a lot of people are going to have, not just banks, but maybe your portfolio and other bits and pieces, is when it comes down to refinancing debt, normally not really an issue. However, the big challenge that people are going to have is that because of 14 consecutive hikes, people who might be on 1%, 2%, 3% mortgages are now going to have to refinance that at 6%, 7%, 8%, whatever the number might be. Now that has a massive impact on cash flow. And if you're having issues with that in your portfolio, imagine what a bank with millions, hundreds of millions in this case, pounds worth of mortgages, it's going to have an absolutely chaotic impact. This is why we said time and time again that this is where opportunities are going to arise, where actually it's going to be a time to buy, because the banks and other institutions might not want all this debt on their books. They might want to hand it off, and this is why a lot of people are saying it's going to be a commercial property issue moving forward. That's if, of course, we're not already in the midst of a crisis. Dare I say the word crisis? So, the chief economist at the Centre for Economic and Business Research, Vicky Price, basically explained 14 consecutive hikes at the Bank of England in less than 2 years is not good news. Yep, we know that, absolutely, 100%. We need to, obviously it's creating a lot of concern within the market at the moment. And not that it should have taken people by surprise, but the rates, again, we're so used to having rates that are quite low, certainly in my lifetime, but going back to the normal rate, again, the normal rate since 1694 is about 5% more or less. Going back to that or just slightly above that has caught a lot of people off guard, and it's thrown the system into chaos as such. One of the things about MetroBank is that apparently it's been involved quite a lot in the mortgage market. It's got a lot of mortgages, so again, it's going to have a lot of issues, interest-only mortgages. The fact that I believe if we scroll further down the article, the bank is due to refinance around 350 million of debt by October 2025. So that's a couple of years away at the time of recording this podcast. But again, if you run a business, you're trying to refinance your assets and whatnot, that's going to have a massive impact on your cash flow, purely because the interest rate is so much higher. Now, is this the start of a banking crisis? I'd say probably not, to be honest. However, what has to be noted is that MetroBank, with regards to, or in comparison to other banks in the UK, they're not as big, put it that way, as other mainstream banks in the UK. The challenge that people are going to face is that if MetroBank are going to have these issues, chances are some of the other banks are going to have these issues as well when it comes around to refinancing their debts. So that's something to watch out for. Interestingly, going back to that chief economic advisor, what she says is that, and I quote, the interesting thing with Metro, i.e. MetroBank, is it has probably a customer base which will not be affected mostly because there is the £85,000 FSCS protection. Basically, what that means is that up to £85,000 in savings, if something happens under a compensation scheme in the UK, if a UK regulated bank were to fail, you should be able to claim that back. Now, don't take that as a given. That's exactly why a lot of people out there say that if you have cash or whatever, you've got to diversify your portfolio. We spoke about that on a recent podcast episode about diversifying your residency and diversifying your passports, etc. Don't put all your eggs in one basket. So if you've got £500,000 in savings, don't have it all at the same bank. Have it spread around just so you might be covered by these regulations. Alternatively, you might want to have the cash in a private vault somewhere. You might want to not have cash. You might want to have it in gold and silver. You know, we're not independent financial advisors. We're not here to tell you what you should and shouldn't do. That's for you to research and that's for you to decide. Point being that if you're incredibly wealthy, you've got to be clever at this sort of stuff, or at least speak to people and employ people that are very clever at juggling finances and juggling this sort of stuff. Because if you get caught with your pants down, and you knew about it, so let's just say MetroBank in the next couple of years do have issues refinancing all their debt, and it means the bank does have issues, liquidation, whatever it might be, you might get screwed as a result. And if you could have protected yourself against that, please don't just rely on the government. Please don't just rely on this FSCS scheme that we have here in the UK. Please do not take that for granted. You've got to take power of your situation. You've got to take control of your situation. This is why we always say to you, take the time to explore whatever other options you have. The concerning thing about this article is that there are rumblings, and this is what we're here to do, Property Nomads. We're here to open your eyes. There are rumblings in the commercial property market. A lot of people can, or more than likely will get hit by this moving forward. And we're here to alert you and say to you that, hey, hang on a minute. What could happen here is that a bank could fail. If a bank fails, is there going to be a bailout? Is there going to be a bail-in? I don't know. It depends what side of the bed the government wake up on. We might have a new government next year completely. I don't know what's going to happen. Protect yourself, protect your wealth, protect your family, protect your business. That's what you've got to do. The rumblings are already there. People like GB News are reporting things like this. Again, there's always opportunity, great opportunity to accrue a lot of property at discount prices. So that caveat is always going to be there. Second caveat is you've really got to take time to protect yourself to the best of your ability. Don't just rely on the government and financial institutions. But a concerning article nonetheless. The rumblings are already there. Things are already starting. Let's see what happens. Please do go and protect yourself. As I said at the start, please do go ahead and head to Progressive Property. It's a great 3-day event. And if you're watching this on YouTube, press that notification bell thingy to get updates on when we produce new content. We're trying to produce as much new content as possible because we know it's useful. And thank you for sharing that content in advance. We'll see you in the next video.